Hi everyone, this is Mrs. V Chen. So welcome to my Form 4 Accounting Lesson 6. And today is 5th of March 2020. Okay, so we will do another DSE question in 2017. Alright, so here is the question. Okay, but this time, what is so special here? Can you see any cash book? No, right? Cash book is not given to you. And also you don't see any bank statements, but you only see lots of words here, right? But anyway, it doesn't matter. Let's see what we have to do in this question. So part A, we need to update the cash at bank account, and then after that we need to prepare a bank reconciliation statement. However, also here we have special condition. Okay, we have restriction saying commencing with the updated balance of the cash at bank accounts. So therefore I have this. So part A, I draw up cash at bank accounts and then bank reconciliation statement. Since we have special requirement saying start with the balance as per cash book, so at this moment we don't know, okay, because this adjusted figure, we need to get this figure from the cash book. So but it doesn't matter, we can still work out the model here. So what do you think? If we start with balance as per cash book, we should add what? Unpresented check, if there is unpresented check, remember that, and minus uncredited item if we have that. So therefore the final answer will be equals to balance as per bank statement. Okay, so here you have a timeline here to analyze the situation. All right, so it is saying like this: the cash at bank of PP Limited showed a debit balance. Okay, the first thing you tell me, what is a debit balance in cash at bank account, which is positive. Okay, and look at the date here, which is 31st December. So therefore I have this timeline, the beginning of December and then the end of December, and this is the cash book, and given to us is debit balance which is positive, so I don't need any bracket here. Is that right? Okay, so which did not agree with the balance shown in the bank statements here. So in the bank statement, okay, we don't know the bank statement figure, so it doesn't matter. Okay, I use a box here because later on we have to find this figure. But anyway, even though we don't know that, these two closing balances are not the same. Again, this is the idea in this chapter. So therefore later on we have to update the cash book by debit something, credit something, right? And this one equals to closing balance after adjustments. Okay, so we don't know that, it doesn't matter. Okay, plus what? Here, if I start from here, therefore we have to plus uncredited item and then minus unpresented check. However, in this question, we don't start with this figure, we start with this figure. So therefore, what do you think? So the plus and minus will be exactly opposite. Alright, so here for this figure, I can simply go to cash at bank account. So this is positive, so I put 105,468, and what year is that? So this is 2016, and this is in December, so I put 2016 here, and this is December. Okay, and this is balance brought down. Okay, to remind you one more time, even though this is the word brought down, it does not mean which is the opening balance. It is a closing balance, however, before adjustments. Okay, so next we need to go through all the points step by step. Now here we come to step number 1. So we have this: the following checks have been issued. Remember what is meaning of issued? Issued means we pay a check. So if we pay a check, that means we're going to credit this in our cash book. So that means this one has been done in the cash book on credit side, however not yet been presented by the bank. All right, so here there are 3 checks issued. So on June, okay, but what about starting from June up to December, this is already more than 6 months. And here we have new thing, you highlight that, saying what? It is the practice of the bank not to honor checks outstanding for more than 6 months. So therefore, this check becomes a stale check. All right, and this stale check is new to us. So don't worry about this at this moment. I will explain later to you soon. All right, hope. And then look at this one. So this is issued in August. So we have credits the cash book in August, but however, still not yet presented in the bank statement. So this one also issued in October. So we have credit our cash book, but however, these two not yet existed in the bank statement. So these two checks are unpresented check. Okay, so therefore, in my bank reconciliation statement here, so add unpresented check. So far we got 2. So that is 35,060 plus 7,850. So how much is that? So 35,060 plus 7,850. So the total here is 42,910. Okay, now let me explain here stale check to you. All right, why it is stale? That means it is not fresh anymore. Okay, so the situation is we pay check. So what is a double entry if we pay check? That means we credit bank, right? And then we pay money to creditor, so that is trade payable. Okay, so therefore our creditor will receive the check. However, the creditor just keep the check for a long time. For how long? For more than 6 months. Okay, so that means this check is no longer functions. It becomes a stale check. So here is the treatment for stale check. Means unpresented check being unpresented for more than how long? For more than 6 months. Okay, so in that case, we have to cancel, return back. To write back means to cancel the stale check by doing the double entry, which is exactly opposite to this, to reverse the check we pay to the creditor. So that would be debit bank and credit trade payable. Okay, so this is the treatment related to a stale check. A stale check, stale means not fresh because it has been unpresented for more than 6 months. So even though you have the check, which is more than 6 months, if you go to the bank, you can never get your money. So we have to reverse the double entry we pay to our trade creditor. Okay, and the amount is 15,236. So refer to the analysis here. Okay, now I need to update my cash book here, debit bank. So this is my cash book. I put 15,236. Okay, and the reason is trade payable. Okay, and the description is related to a stale check. Okay, so point number 2 is direct debits. Remember this? It means already done in the bank statement, but not yet done in the cash book. Okay, so therefore, we have to update the cash book. And direct debits means a debit side in the bank statement, which is negative. We have money deducted from the bank for paying electricity. However, not yet exists in the cash book. So I have to credit my cash book by 900. Okay, and paying for what? Paying for electricity because of direct debits. And this is point number 2, and this is referred to point number 1. Okay, so point number 3, PP Limited. So we are PP Limited was notified that an adjustment this much will be made by the bank in January. So we are doing the things in December. So the adjustment will be made in next month for a debit entry. Okay, so what is meaning of debit entry? The debit entry means in the bank statement, which is negative. All right, made in error. So that means where is the error? Where is the mistake? The mistake is made in the bank statement. So that means the bank has wrongly deducts money from our bank account. However, the adjustment is not made in December. It will be done in January. Okay, so how are we going to adjust this? So to cancel the debit entry, which is negative, so that means we have to add back here. So we have to add back in the bank statement. But since we don't start with the balance, since we don't start with the balance in the bank statement, however, we start with this, so that we have to reverse everything. So let me repeat. So debit entry means negative. Okay, we have to cancel the negative by adding, right? But since we are doing the opposite, so we have to change the adding to a minus thing here. So less. Okay, so this is a mistake in the bank. So bank error, which is to reverse the debit entry, and related to point number 3. And how much is that? So which is equal to 8,755. Okay, point 4 is very straightforward. So bank charges not yet done in the books. Books here means the cash book, right? So bank charges means we have money deducted from the bank statement. So therefore, what is adjustment? We need to credit cash book 794, and this is bank charges. Oh, this is a very straightforward one. Okay, so point number 5, dividend income is new to us. Okay, so you will learn more about this dividend when we come to limited company. Okay, but it means what? It means we buy shares of another company, so therefore we earn dividend. All right, so look at this, credited by the bank. That means already done in the bank statements, and credit side is positive. That means we earn this, we receive this. Okay, however, we have not yet done this in the books. Means what? The cash book, which is the cash at bank account. All right, so to adjust this, so we need to debit cash at bank, so which is 3,160 because of dividend income, according to point number 5. Okay, so another straightforward thing, point number 6, saying a check received from customer was returned by the bank due to insufficient funds. Remember this? Okay, this is same as what? We receive a check, however, the check worth nothing. So therefore, no entries have been made in the books for return check. So actually, what is this return check? This return check is same as what? Dishonor the check. Dishonor check means we have to cancel the check, received it in the cash book, which is cash at bank here. Credits 11,630. Okay, receive check from trade receivable, that is debtor, and the description is dishonored check. And point number 6. Okay, so number 7, a check payment for rent and rates this much was wrongly recorded by this much. So which one is the correct figure? So this one should be correct figure. Correct, CE is correct entry, and WE is my wrong entry. Okay, but anyway, whenever we pay check, we have to credit cash book, right? This should be the total amount credit in the cash book. However, the credit side is too large. Okay, so how do we do the adjustment? If credit side is too large, therefore we have to debit here with the difference, and the description is rent and rates. Okay, being overstated by 21,530 minus 21,350. Where's my calculator? So 21,530 minus 21,350. 180. Okay, and this is related to point number 7. Okay, so another straightforward one here. Checks deposits. That means we receive a check. And look at the date. So late. Were recorded in the books. That means we have debit our cash book, but not yet credited by the bank. Remember this reason? What is it? This is obviously uncredited item. So where is uncredited item? Which is here. I already have the position for uncredited item. So let's uncredited item related to point number 8, and I use a bracket for lesser. 81,425. This is it. Okay, so next here we have a special point and a difficult point, and then you can give me a highlight to number 9 here. So this time we are talking about a term deposits. All right, so what is meaning of term deposits? Okay, so here. So the idea in this chapter 7 is about the closing balance in cash book and bank statement. They are not the same. However, what we are talking about in chapter 7 is related to current accounts instead of fixed deposit account. And fixed deposit account is same as term deposit account. Here, term deposit account. They are talking about the same thing. All right, so what is current account for? Okay, for you to pay check, for you to receive check. So this is what our concern. But however, this cash book and bank statement has nothing to do with term deposit account and fixed deposit account. All right, this is important. Okay, so let's look at the information. So during 2016, a term deposit of 60,000 was made and recorded in the term deposit account. So therefore, I have this double entry. All right, so during the year, so that I have to change. So 1st of January 2060. So during the whole year. So this is a double entry for a term deposit was made and recorded. So credit bank means we transfer 60,000 into a term deposit account. So we debit term deposits. So what do you think about the debit item in the statement of financial position? It must be a kind of assets, right? But what kind of assets depends on how long you put your money in the term with the term deposit. If it is more than 1 year, okay, and that would be a kind of non-current assets, right? If it is less than 1 year, okay, you treat that as current assets. So what is the point of transferring money from the bank account to term deposit? Because you can earn interests there. Okay, so however, we have this. The bank credited an amount with this, which is higher than the principal, right? Okay, because this figure consists of two things, the principal and the interest. The bank here means the bank statement. And in the bank statement, if it is credited, that means it is positive. That means we have more money received in the bank statement. Okay, so to the account PPP Limited. So we are PP Limited. When the term deposit matured on 2nd January. Oh, here is the point. So when should we record this in the cash book? It should be no later than January 2nd, because this is the dates that we earn this principal. We get back principal and interests. However, PP record the receipt in December, which is earlier than that. Okay, so this is about more money received it. So therefore, the firm has debit the cash book too early. Okay, so how you should correct the mistake? We need to do the opposite to cancel the wrong entry done in the cash book by going to the credit side, right, to reverse it, because we should enter this in cash book not in this month. However, it should be in January. All right, so to cancel this by the original amount, which is 60,000, is the original amount for term deposits. So term deposit, because term deposit is a kind of interest. And what about the extra thing? 1,200 will be the interest income. We debited in the cash book too early, so we have to reverse that. Okay, so after we have finished all the adjustments in the cash book, now you can use your calculator to close it, and then you will get this closing balance after adjustments. And this one is also same as the balance as per cash book adjusted after adjustments, so that is 49,520. Okay, so and then I use my calculator, 49,520. Okay, so no battery for this one, I use another one. Okay, 49,520 plus 42910, so I get 92,430. Okay, so minus 90 and 180, so this is 2,250. Okay, yep, so this is about the DSE question in 2017. And to remind you one more thing in this question, so we have stale check, which is new to us. We have this dividend income, and then we have a difficult thing here, which is about term deposits. And always remember that the cash book here, the bank statement here, always refer to current account for check paid and check received instead of the term deposits account. All right, so thank you for watching my video. I'll see you next time. Bye bye.